Are you wondering what's going on with the San Jose real estate market? Wow, it has started off so hot and we're not even officially in spring yet, so stay tuned to hear what's going on. Hi, I'm Theresa Wellman with HomeownerExperience.com, your local San Jose, California realtor. And today I'm bringing you the actual market stats for the closed data through February. But we're also going to talk about what I'm seeing out in the field. So let's jump into the computer and get into the real heart of what's going on in the San Jose market.
This is of the entire Santa Clara County market all the way back to January 2000. I've had this chart, but I know I don't share it very often, but I thought it was really relevant right now to share the perspective of what the market looks like versus the history we've had in Santa Clara County, Silicon Valley. So spring came really early in multiple aspects. The sales are very strong. I guess the change is that there's not a lot of inventory. So the inventory is still in winter, but the activity is in spring and the prices have really shot up like spring. And the closed sales, to quantify it, are up 23% year over year. And the pendings are up 43%. So that has caused a lot of extra demand with the low supply and overbidding, which is why we see these orange and blue lines of a very sharp price increase. So now let's bring it down to San Jose, what I normally talk about. So here you see that inventory indeed still is low, even in San Jose. And amazingly, it's lower than we've seen a lot in the history, and it's been hanging out there pretty low also. So 19% lower than year over year. Sales are high for February with this green line here really strong. And if you look back several years, that line is much lower than, or this yellow line I put here. And pending activity is very strong, up 35% from January and 46% year over year. So actually a little stronger than the county numbers. So that means more of those sales are actually focused in San Jose, probably because of affordability. So here, let's look at the February closed data. The prices were up 2% on average from January and 12% year over year. So not as sharp as what we saw maybe in the Santa Clara County numbers, because I think of affordability and sheer numbers, the averages are smaller. But sales are very strong. This time of year, we're up 21% more than February 2020. So in the field, I'm seeing multiple offers on almost every property. All the properties that my buyers want to bid on actually have been 10 plus offers. Very strong market. So homes that have some either are total fixers or homes that are really nice are getting tons of activity for sure. Many homes are selling $200,000 over or more. Last week, I just had one in Japantown that went over $350,000 more than the asking price. And honestly, that asking price was the highest for that area in a very long time. So I don't think the asking price was off. It's just how much demand there is in the market right now. So if we look forward, there is strong market signs, no signs of a slowdown. Because of the supply and demand imbalance, I don't think things will be changing for a while. Highlighting this time of year again with these yellow circles, look at the green lines of sold and look at the inventory, right? So inventory is pretty comparable to last year, but the sales are much higher. And this pending line is really sharp and active for this time of year. So the factors that may change the direction of the market are increasing interest rates, a lot more inventory. We really got to change this yellow curve here, or a big change in the stock market. Those are all factors that could affect the local market. Until any of those significantly change, I don't see the fundamentals of the market changing, and I see that the San Jose prices will continue to appreciate. So as said, it's a very strong market. We only have 21 days of inventory, and that's based on the sales. If we look at the pending numbers, you know that those were much stronger. So it's actually really a lot less inventory on the market today. And that means that, like I said, sales are up 34%. Inventory is only up 23% from the previous month, but it's low for this time of year, making the sales price to list price ratio 107.8%. Yes, that is what's going on with this supply and demand imbalance. Very strong activity. That is on average. Again, I must note to you, I'm seeing plenty of them 10, 12% over asking, amazingly. And the market needs inventory. So I have not seen that many people moving yet. I do hear of that happening. So hopefully this inventory will balance out the market a little bit stabilize prices, allow some more buyers to get into the market. So I think it's a good thing, actually. So the 17-year average of percentage of properties in market is 41%. Today, we're at 66% of properties in contract. So again, just really strong activity. Now let's look at the condo market. Countywide, condo is finally seeing a little bit of recovery. The prices popped up. The sales activity here down at the bottom popped up, and the inventory kind of settled and actually even went down in February, believe it or not. So sales, it's taking a little bit of a turn, right? Up 30% year over year. Pendings are up 42% year over year. And inventory is up 26% year over year because it never really decreased. So there is still good activity in this market, but it's on average 102.4% of asking. So if you're in that really difficult price point around $1 million or so, I really recommend you consider a condo or a townhome because the overbidding is not nearly as strong in that area, and less competition just means it's going to be easier for you to get in and compete. Now let's look at the interest rates. They did indeed tick up. It's hard to see in this chart here. The blue line is underneath this orange one, and they're up over 3%. I don't think the twos are going to be back this year. If we look at the historical averages, right, we know we're on phenomenal record-breaking numbers. This is a 5-year history, and even looking at that, it's really phenomenal. And what I'm hearing economists say is by the end of 2021, we will be at probably 3.5% interest rate. So it's going to slowly increase throughout this year. That will dampen things and make it not quite as affordable, but it's still not significant and still record lows. Now looking at another factor that I always reference is the S&P 500 versus the average price. So I know the stock market did go up in February and then back down, but I just take a snapshot of once a month here. So actually, there was a little dip there and it's increased. The green line here, you see, housing prices were trending down because of seasonal. They're now back up. I do believe based on the stock market, they will continue to go. And like I said previously before, unless something significant happens in the stock market, the real estate market is going to continue to appreciate and move forward with this trend here as well. Unemployment, unfortunately, they're still only reporting December numbers at 5.9%. We all know that finally some of the rules in Santa Clara County have loosened up a little bit. More people are getting back to work. So that number is continuing to improve, which is great news. So next, let's buyers, be prepared. It's really competitive right now, and you need to know how to get a good mortgage lender, get pre-approved, get underwritten loan. Please watch the video on how to choose a mortgage lender. And sellers, want to know what to expect when selling? I got a great video on that as well. Thanks.